Hi everyone, welcome back into another video from XLpips, and today's video is going to be about order blocks. I know a lot of you guys knows about order blocks, but also I know a lot of people have been going through a lot of challenges in marking the best order block or the high probability order block. So this video is going to be a video that's going to show you how you can simply choose the best order block and how you can actually save yourself from being liquidated in the market, or you can save yourself from actually choosing order blocks which are going to become inducements, because there are order blocks that are not going to work and there are order blocks that are going to work. Okay, so it's very important for you to actually choose the best order blocks that are going to become the best entry points. Okay, so let's start with defining order blocks, because order blocks are very important for any trader who wants to actually master smart money concepts. So order block is the visible spot on the chart where large orders is being placed on the market. So you may ask yourself, like, how can I know if this is a place where I have large orders? How can I know if this is where large orders have been placed? And how can I see it? Okay. So the best way, or the simple way you can actually spot or know if this is your order block is by actually looking at the price action of that movement. Okay, for example, if we are bullish, okay, if we are bullish, we are forming a series of high highs and high lows. Okay, so let me show you. For example, we are bullish. Okay, we are forming high highs and high lows, high highs, high lows, high highs. Okay, so there are series of high highs and high lows being created. Okay, if we are bullish, high highs, high low. So in order for you to know if we are bullish or if we're in an uptrend, we need to see price keeps on breaking structures. Okay, continuation of price breaking the high highs and forming new high highs. Okay, again, we see price breaking the new high high and forming a new high high. Okay, and then expect to see price take out that new high, okay, and create a breakout structure. So in order for you to mark, to know if you have an order block, you need to look at price action. Okay, look at price action, and you need to check for a quick move. Okay, a quick move. What do I mean by quick move? Here we are talking about the momentum of price. Okay, look at this movement. Okay, the movement. The first thing that you need to check is check for that leg, that movement that created a breakout structure. Okay, for example, you know, from this area here, that's where this movement started, and this is where we formed a new high, which means we broke this previous high and formed a new high, which means this leg was very strong that it was able to break this previous high. So this is an example of a quick move. It means it's a movement with a momentum that is able to create a breakout structure. Okay, and also that leg must leave behind imbalances. Okay, so inside, what do I mean? Like in this leg, okay, you need to check for an imbalance, especially if it is on the discount level. Okay, that's going to be a very good imbalance. That's going to make this leg as a very strong leg that can actually be used as our area where we can actually look for our order block. Okay, and the last thing is structure must be broken. I've already explained this. I've said the leg that breaks structure will be a leg which is strong, and also if there is a imbalance has been left behind, which means that means now this leg is also strong and it's going to actually be used as a point where price will come and create a retracement. Okay, so where are you going to mark your order block? You're going to mark your order block at the candle. Okay, the order block is going to be the candle that was before an impassive move. Okay, that's going to be an order block. So down here, this is where our movement started. The impassive move started from there. So it means this is where you're going to look for your order block. And an order block is the last opposite candle before an impassive move that create a breakout structure and leave behind imbalances. Okay, so that's a simple way you can define order blocks. Like it's a last opposite candle before an impassive move that create a breakout structure and leave behind imbalances. Okay, it's just the same as what I was explaining here about how can you look for an area where there is large orders being priced in the market. Okay, so now let's check on the types of order blocks. Okay, so now we already know what exactly is an order block. So now let us check on the types of order blocks. There are two types of order blocks. So we have the bullish order block and also we have the bearish order block. Okay, so I have already shown you an example of how you can mark your order blocks. Okay, so let me show you how you can actually define these two types of order blocks. So the first one is the bullish order block, which is the last bearish candle. Okay, it's the last bearish candle. Remember that it's the last bearish candle before an impassive move to the upside. Okay, because we are talking about bullishness. Okay, an uptrend. So it's a last bearish candle. Remember this: a bullish order block is the last bearish candle, not a bullish candle. It's the last bearish candle before an impassive move to the upside that breaks structure and leave behind imbalances. Very important things to consider. Okay, it has to be breakout structure, and also it has to be imbalances being left behind. Then that leg has to be an impassive move. Okay, and your order block will be the last opposite candle. Okay, so if we are bullish here, it means the opposite candle is going to be the bearish. So if we are bullish, it means the last opposite candle, it means it's a bearish candle. So looking at this area here, you can see we have this last red candle here, which is the last bearish candle before this impassive move. Okay, you see this impassive move here, which created breakout structure, which means breakout structure can either be market structure shift or change of character. Okay, because this market structure shift or change of character is the breakout structure in the opposite direction. So if you were selling like here, price just decided to change direction. So it means the first area where you're going to mark as first sign that the market is reversing and creating a new direction, that's going to be a change of character or market structure shift. So this area here, this is where we marked as market structure shift to the initial one, and this is the major market structure shift. Okay, creating a very strong indication that the market is reversing from selling into buying. Okay, into buying them. So that's how simple it is if you want to actually mark your order block. Okay, so what you do is now you need to go back into the definition. Like the bullish order block is the last bearish candle before an impassive move to the upside that breaks structure and creating what imbalance. So already this is our last bearish candle before an impassive move, which is this impassive move here, and that breaks structure. Break of structure we have it. This is market structure shift here, and this is the more confirmation of break of the change in direction. So this is also break of structure. Okay, and leave behind imbalances. If you look closely here, you will see the imbalance. Okay, let me show you the imbalance here. So we have the imbalance here. You can see this fair value gap here. Okay, that's the first imbalance. Also, we have this one here. So you can see this imbalance here is in the discount level. Okay, so it becomes a very strong point for price to go back and actually tap into our order block, this one. So if you mark this as your order block, you know it's going to work perfectly. Okay, so that's how simple it is when it comes to marking order blocks. Okay, very simple, very, very simple. Okay, so you need to just be careful when you are learning about these order blocks. Okay, so you can see, let me draw it for you here. You can see this is our order block. So the order block there, you can see that's the last bearish candle before an impassive move to the upside that leave behind imbalances and create breakout structure, which here is in form of market structure because we were changing the direction of the market from selling into buying. Okay, so let's check. So we have the note here which say it is very important if there is liquidity sweep before formation of an order block. So you can see from my example here, it's very, very important. See this, very important. Okay, it is very, very important. Very important. So make sure there is liquidity sweep like what you can see here. Okay, make sure there is liquidity sweep, because liquidity sweep is going to give you an indication that, okay, now the market has already taken out the early traders, okay, the early buyers. Okay, those people who are expecting to buy from this level here, they have already been taken out of the market by this movement. And so now we know we can wait for a reversal or market structure shift, which will then give us a very good entry point, which is this now, okay, an order block like that, okay. So that's how simple it is, okay. Make sure there is liquidity sweep, okay. I will show you one illustration of how you can look for a good example for earlier for you to mark your order block, okay. And that's one of the biggest difference between simple order blocks and the true order blocks, okay. So you can see another example here. So if you look closely here, you can see we had this first entry, the order block, the first order block there, because we had this break of structure there. We had that break of structure. And then you can see price went up and mitigated this order block. And then we saw this leg to the downside, which created this break of structure there. Okay, so that break of structure there. And if you look before formation of this order block, you can clearly see that we had this turtle soup here, okay. Yes, we had the turtle soup there, which is the type of liquidity soup, okay. And also before we tapped into this order block there, this bearish order block, you can see we had this inducement leg, this inducement level, which was below this fair value gap, okay. So you can see we had this fair value gap above this inducement level, okay. And you can see above the fair value gap, we had this order block, and you can see this is our impassive leg to the downside that created what? That created break of structure, as you can see here. Okay, so this example is an example of a bearish order block, okay, because a bearish order block is the last bullish candle before an impassive move to the downside that breaks structure. Remember this, that breaks structure and leave behind imbalance. Remember this, very important, okay. Break of structure, or it can be market structure shift, or what we call change of character, okay. So it can be one of those two, okay. It has to leave behind imbalances, okay. That's how nice it is. So you can see here, we have break of structure here, okay. We have imbalance left behind there, okay. It's an impassive move. For it to be an impassive move, it means there has to be imbalances being left behind, okay, which are fair value gaps, okay. So, and it has to be the last bullish candle. The bullish candle here is the green one. That's the last green candle here. That's going to be our bearish candle. It's going to be our bearish order block, and that's why this tap here gave us a very nice retracement, and you can know like already this is a very good point for you to actually sell. So that's why you can see this movement there, okay. Another thing to consider is the liquidity. So make sure that it's liquidity before formation of an order block. That's going to give your order block a very strong point, a strong reason for you to use it, okay. So you can see the example here. This is not a very good example, or it's a low probability setup. Why? Because this order block here, there is no any liquidity sweep. Even here, there is no any liquidity sweep. There is break of structure. As you can see, there might be also a fair value gap. Okay, there might be a fair value gap. Okay, there might be fair value gap or imbalance. But if there is no liquidity sweep, then there is no reason for this order block to be strong order block. Doesn't mean all of these order blocks are not going to work, but in a high probability sense, okay, if you are going to look for a high probability order block, it means you really need to consider the concept of liquidity, because liquidity is what drives the market. Liquidity is the fuel of the market. So you need to actually wait for liquidity sweep, okay. After you have actually had your liquidity sweep here, then you can wait for market structure shift, as what you can see here, okay. Wait for market structure shift or break of structure, okay. And after that, then you can mark your order block after you have observed all of the other criteria, like the fair value gap, the imbalance, if there is an imbalance, okay, on the discount level, and if there is also an impassive move to the upside, and all these other criteria that I've said, the liquidity sweep, the market structure shift, okay. The same applies when you're looking for sell opportunities. So make sure there is a liquidity sweep to the upside, which is buy side liquidity. And after that, we have seen buy side liquidity, or we see turtle soup, okay, maybe in form of turtle soup. If you see them, then wait for price to create this market structure shift, okay. Wait for market structure shift. Look for your fair value gap at the premium level if you're looking to sell, and then wait for price to come and mitigate your order block, and then you can wait for how the market reacts, because it's going to give you a very nice sell, okay. So that's an example, and you can see another thing to consider is these levels, okay, these levels. So if you have two order blocks, like first and the second order block, sometimes you may be confused, like how can I actually choose the best order block? The most important thing is to make sure that before any of your order block, make sure there is an inducement. So if you look at this leg here, this example, you can see there is no inducement. Okay, there is no inducement that has been created. The only place that you can act as your inducement is this second order block. Okay, why? Because price tends to create this kind of inducement. Okay, sweeping that and coming to respect this. Okay, why? Because we are always expected to see price dropping down into the discount level, sweeping liquidities on creating inducement before tapping into the correct order block. Okay, see that? So the same applies to this. This second order block is not going to work. Price is going to sweep it, and you can expect more drops to the downside. Okay, so make sure you keep that in mind. Okay, make sure you check for liquidity sweep. Okay, same applies to this example. Okay, this is going to be your inducement area, IDM. Okay, and price has to sweep it and then continue going higher. The same applies to that. Price will sweep it and go to the downside. Okay, and this one is going to be respected. Okay, that's how simple it is when you're trying to look for the best order block. Okay, it's simple, but if you actually take enough time to backtest, you will see different occasions where this is going to work perfect. So the same applies to this example. You can see here we had this order block. This was our order block. Above it, there was this fair value gap. So you know already, like, this is an impassive move to the upside, because we have an order block here. We have the fair value gap or imbalance being left behind here. Price broke structure to the upside. Okay, and before tapping into this order block, you can see what happened here. There was an inducement. Price came into that, swept that inducement, okay, and tapped into this order block perfectly, while also filling this imbalance there. So you can see how nice this movement was. You can see how impassive it was, because the market had already retraced to fill the imbalance that was left behind. And as it was retracing to filling this imbalance, it created an inducement level that also was swept. So the early buyers here were taken out of the market, because they saw the market is now going to go. Okay, the market is going to buy now. So they tried to actually take their buy positions from this area here. But what happened is price reversed it down, sweeping this inducement and tapping into the order block while filling the imbalance that was left behind before going higher. So that's how nice it is if you really know how to use the order blocks, how to mark the order blocks, and how to look for inducement. Okay, because that's going to help you to actually avoid unnecessary losses. Okay, so another high probable setup, you can see this one here. Okay, simple example, because here we have the break of structure there, break of structure to the upside, imbalance being left behind. Okay, you can see this is an impassive leg. Okay, and there was this inducement. You can see the inducement here. If you have checked the video about liquidity and inducement, I think you understand why this is a very perfect inducement level, because this leg tried to fill the imbalance here but went up, which means now we didn't have any movement to the downside to come and retrace into this order block. So which means the leg that tried to fill the fair value gap will actually be used as an inducement leg when price is creating a retracement. That's why you see this retracement here swept to this inducement, okay, and then tap into this 50% of the order block. 50% of this order block. Why? Because this order block is very big, so we cannot use it as the whole of it as our entry point. We are going to use the 50% of it. in order to actually have a good risk management. Okay, so this 50% of the order block, this is what we call the mini threshold. Okay, we're going to take our first entry here, and if you missed this or you are not confident enough to take that trade, you can wait for a re-entry on this breaker block. Okay, on this breaker block here, and price came down, tap into the breaker block here, this breaker block, you can see price went higher. So if you haven't learned about breaker blocks, there is a video about breaker blocks, so check it out and you will just understand it. Okay, so it's a failed order block. A breaker block is a failed order block which turns out into a very good support or resistance point for price to actually continue in that desired direction, like what happened here. So it was like a failed bearish order block, which then turned out to become a bullish breaker block, which pushed price to the upside. Okay, very simple, very nice. Okay, so let us take another example. Another example you can see here. Okay, very nice. Okay, see, we had liquidity sweep here before price started to push higher and created break of structure there, left behind this beautiful imbalance. Okay, and while price was trying to come into filling this fair value gap, you can see created an inducement. Like as I have said, the movement that tries to fill an imbalance before tapping into the order block, it's always becoming an inducement leg. Okay, try to go and check it out. You will see the leg that fills an imbalance will always become an inducement if price will actually retrace back again into the desired order block, because this is where large orders were placed. This is where the movement started. So it means price will just try to come back into this point, tap into it before continuing to go higher. And while price is trying to come back into this order block, it means it's going to try to actually accumulate more orders, take out some early traders, some early buyers, like what happened here. These are our early buyers that are taken out by this movement to the downside. Okay, and this was the first entry. So if you miss this entry and you are not confident to execute this one, you can wait for another re-entry, which happened here on this breaker block. Okay, this breaker block acted as a very good support level. Okay, where price came back again, tapping into it, filled this fair value gap and making this entry point as our unicorn model. Okay, I've already created a video about this kind of entry, the unicorn model, where the breaker block overlaps with the fair value gap. So you can see after that price went higher. That's a very good movement to the upside. Okay, yeah, so let's check another example. Okay, let's check another example here, which is going to be, I think, our last example. Okay, on how we can use bullish order blocks and how we can actually execute good trades. So let's just wait a little bit. Yeah, so there is a bit of interruption here. Okay, let's take it out. Last example of how you can spot your bullish order block. Okay. So this is for a bearish order block. Okay. We had some examples about bullish order block. So this is for the bearish order block. Now we can spot it. Okay. Make sure there is always liquidity or inducement before mitigation of your order block. Okay. Because if you cannot just spot liquidity sweep, then it means you may actually end up becoming liquidity. So make sure you're very serious in spotting the liquidity points or the inducement levels. Okay. I think there is a problem here. Yeah, I think my explanation about order block, I think, is good enough for anyone who is trying to actually understand about order blocks. So you can see we have some troubles here. So I cannot keep on actually showing you the challenges. So guys, I think that will be enough. And if you are looking to actually understand more about order blocks, I think You can just check again this video because I've tried to explain everything in a very understandable way and also in a very simple way for anyone to understand. Okay, so that's how simple it is. But make sure before entry, before any mitigation of your order block, there is liquidity sweep, or it can be before formation of your order block. Like what happened here, you can see sometimes you have a liquidity sweep and then price creates that impassive leg to the upside that leaves behind imbalance and form on your order block. Okay, that's how you can choose your order block. Okay, as I have already explained. So guys, thank you for your time. Have a nice day.